Hey, good day, people. It's your boy E White. All right, so I'm gonna go over our earnings strategy. All right, I'm trying to make this video short as possible. Okay. All right, so earnings strategy is something that over the course of the years I've been noticing that around earnings, price sometimes take a contrarian or opposite effect of what people expected. For instance, if someone has great earnings, sometimes it's hard to see that price will actually drop. If someone had bad earnings, I see price rise. So I just started taking this seriously, and I started to actually make some trades in the market based off of it. And it really falls into what we do as contrarians, um, with supply, demand, liquidity. Right? You gotta have liquidity to move the markets. Okay. Now, I need to do some more research to figure out why these E's, which are short for earnings, are gray. Um, Typically, they'll either be green, like you see right here at the bottom, green or red. All right. But I figured that out along the way. However, yesterday we did have an earnings call on advanced auto parts, right? And I'm just going to look at this little article they had on Yahoo Finance where it's breaking down the revenue, right? So they reported 3.41 billion in revenue ending in March 2024, right? Um, but they said it's representing a year over year decline. Okay. Now let's get down to the nitty gritty. All right. And I want you to look at this section right here. All right. So you got these companies do these ratings or whatnot, these analysts, and you got a lot of people, for whatever reason, they follow these analysts, such as Kramer, right? A lot of people do the opposite of what Kramer says, right? All right. So if you look at this, all right, it says a return negative 3.8% over the past month versus the Zacks S&P 500 composite. So it has a rating. The Zacks ranked number 5, strong sell. I want you to take a look at this. Strong sell. All right, strong sell. So what do you think the vast majority of people did that follow these things? They probably are selling. However, if there's a lot of people that are selling, that means that there's some liquidity there, and it also can provide someone who wants to buy. Okay, and so you also can um, create what we call, you have short squeezes as well too. So there's a lot of tactics that people that has bigger capital, such as the institutions, that can get involved in, and they can take advantage of this. All right. Now their revenue is still pretty strong, so a couple of percentage points here and there off of an estimation, it's not really that big a deal, right? But for whatever reason, investors do take that really, really seriously, right? All right, so earnings came out. Yeah, it wasn't as good. I mean, it wasn't bad, but it sort of missed the mark on certain things, right? So I took on a long position. I took some call options out yesterday based off what I see on the chart. And number one is that price was really sitting into another demand zone. All right. So that was a metrics that checked off from our box. And two, so-called earnings wasn't what people expected. So I looked to take a long position. I just exited out of the position. I was satisfied with what I had today made, right? But let's go back in time and let's look at some things. Let's look at this earnings right here. So we can click on here and we'll see. We get a little bit of snapshot. Um, they they reported 2.465 billion. So they had a surprise in revenue. Okay, but for earnings wise, all right, they also had a negative surprise. Okay, so they had a minus 59 cent, minus 59 cent estimate 21. So this is what the actual surprise was as far as their earnings, right? But revenue, they actually surpassed that, so they're pretty good on revenue. But so with these earnings, okay, This is basically after everything is said and done, the earnings, right? All your cost expenses. But let's look at this. Why are we going? Why are we rallying? Right? So we had we had, we had earnings that wasn't so great, but we rallied. So this would have gave us a contrarian view and say, hey, we'll look for some buying opportunities to go to the upside. Okay. Let's look at this one here. Same thing. Look at the surprise. All right. So this is what we're looking at. We're looking at this. We're looking at the earnings. All right. So negative 2.59. Okay. You got to remember, revenue and earnings is not the same. All right. So we get a little sideways move, and then we push. Of course, you see what happened. We rally up to the upside. Nice little growth. And we moved a little sideways, but we inched up and moved up. Pretty good, impressive rallying point. All right, look at this. This is the telltale. We did good in everything. Earnings was great. We got a surprise in earnings, and we got a surprise in revenue. We should be going up, right? Guys, look at the cliff that it fell off of. All right, look from here. Look, and just we just trended down. How does this happen? We had everything checked off. We're good. So guess who all ran to the market? A lot of people who are the retail investors that say, hey, this is a no-brainer. It did good at earnings. I'm gonna buy more. I'm gonna buy more. And because you want to buy more, that means that somebody wants to sell more because you are the liquidity. You have come to the market and you have provided them what they need. They need for every buyer there must be a seller. For every seller there must be a buyer. You're providing that. So that was a massive drop. Okay. So go look at some other. So go look at ADP. See if we can see a correlation. All right. So this one early in May. So May 1st. Now remember on a daily chart. Look what happened. So this is May 1st. Earnings came out. It dropped for 2 days. Then it found its footing, pushed back up here, and now it's dropped again. Now we're back. We're back in this area. Okay, it's fighting. So it's found a base. It's respecting this support level. But from when earnings came out, we had positive on both, but we had 2 red days. Yes, we rallied back up eventually, and then we dropped back down, and then I had one, two, three. And I had 4 red days in a row. Now, here's an interesting one. Now, it let's look. So right here, we did have earnings it was positive. All right, but if you look at this pattern, right, this candlestick pattern, which means that price it dropped here. All right, it opened up the next day. It looked like it was going short. All right, and then it found itself, and then it pushed back up. So this one rallied, but eventually it came and closed this gap. So this is a gap play that could be played. Okay, but if you notice, and all these won't just play out like we think. All right, we gotta look for market structure, see how things play out, and you gotta have your protected stop losses in place as well too. But you see how uh, we tried to make itself down. We got back here, we got exhausted, and we came back into this area, and we hanging out in this area a lot on this. Let's see how this will work. All right, so they had a surprise positive in earnings, but then on the revenue side they dipped. So this was on October 23rd. Right, and so then we basically had one, two, three, four, about 4 days. We finally bottomed out from this earnings report. And so we did get some downside pressure, and then eventually we rallied from that. So on this end, you see that the revenue was negative. So what I would do now is I would study if revenue is negative, maybe be looking for a positive rally to the upside. If revenue is positive and earnings is negative, it may be run to the downside. So there's things that you would be able to study, and that's what we do. We got to study these patterns and see how things are working out. All right. So you got both of these very good, but eventually, when was this? This was sorry. This was July 26th. July 26th. Yep. So earnings came out here. We get a dip. Of course, we rally back up. Get another dip, create maybe a double top. Try to rally me up, and then we had this drop. But earnings and revenue was strong. Yet we still finding it. So what are we looking for? We're looking for these types of patterns, and we're looking for the entry points to get in. You probably asking like, what type of entry points can you look for? Right. So for me, I like to do engulfing bar type things. All right, that I'm looking, for entry, for bars engulfed or whatnot. So if I'm looking for something like that, maybe I'm looking to go short once this candle right here is engulfed. So we get close, but this candle engulfs it. All right, I'm short. My protected stop loss goes above. The candle got eliminated. All right, and so if I was trading this, I'm probably trying to trade it back here to this gap. All right, we get here, you got a lot of pullback. I probably wouldn't do, if I'm trading options or something like that, I'm more likely going to go ahead and get out if I'm deep into profit like this. Not going to hold on. But yeah, it's a whole lot of back and forth. You might even be negative, get close to hitting your stop loss, but eventually you do go and it closes this gap out. But I trade options different. I'm not a big long term holder of options. Once I'm in a decent amount of profit, I start to secure it, get on out, and just keep it moving. But those are different ways. You can look at market structure, where prices is in relation to structure. You can play it like this. And of course, I'm on a daily chart. You can go down to a lower time frame. You find some favorable chart patterns that'll show up. All right, look at Tesla. Tesla is going to be a good one, so you can see how it's ludicrous. So right here we had negative. It was negative on both, guys. Negative on both, but all of a sudden, what happened? Price is what? Rising. And it shocked everybody. So if everything was negative, that means that a whole lot of people was what? Shorting. All right. Same thing. Bad earnings on both revenue and earnings. All right, on this day. We rallied up a little bit. We pulled back some, and then all of a sudden we get this little rallying point. Now you may say that's not a lot. Well, if you trade in options or if you are a day trader, that's a pretty good decent move going from 175 up to 206. That's a hell of a move. But if you know what if you know what you're looking for, what do we see? I mean, that's just nothing but a classic. What this is a classic bear flag. Oh, yep. So it's a classic bear flag. And if we want to get our targets, we can use our Fibonacci extension tool. Boom. So I want you to be able to see the extension as if it was back in real time. Right? You see a flag pattern forming. You want to get the downside targets. We're going to measure this impulse. We'll know that our target will be in between this particular zone. We're only really looking for the upper band for the first target. And then once those are achieved, we can start looking at a secondary target level. We take this down. I'm showing you how this would have been drafted up if it was looking back at real time. Flag. There's different ways people do this. Of course, they take the flagpole and measure something like that. But I like the Fibonacci extension. Right? And when we have something that look like, hey, I think the price is going to come here, make it happen. Targets hit. Another one. Everything played out well, but then we had a downtrend. We went into a downtrend, guys. Like, how does this happen? We know why now, right? A little difference right here. We got the earnings was positive. We had a little temporary drop, and then we rallied. So, yeah, I want you guys to start looking at. Let's look at Google. Some of these patterns, right? You may see things that I may not have seen, but you can go through and make sure on TradingView you got the earnings. I believe you can select that. Um, I do have a premium account, so I don't know if it comes just with the premium or whatnot. But you have to check it out and see. What is it? So we got both of these for Google. So it had a temporary drop, but of course it's rallied up. However, it's at some key levels now. So it's a possibility we might start seeing some form of pullback, and it may look similar to what we just looked at when price can give itself some room. Now, what is this? So here's a couple things that can happen here. It could be another player in the market that everybody started shorting at this level, and a bigger player saw that and said, "Hey, I'm going to short squeeze these guys. We're going to take price up." And not all of them, all of this is nothing but shorts being squeezed, and they're closing out their position. But they also are gearing up. So something big is looking to maybe take this back down to the downside. But we also got some gaps right here. There could be some key levels where we could trade this back into these gaps. We have multiple gaps on the chart so far, but we see on the chart that we got gaps that are continuously being closed. We got a gap here. Eventually, price came down over here to close that gap. Of course, you're going to have gaps that don't get closed, but if you pair it up with market structure, events, financials, you may have a greater chance. All right, so they got bad on both ends. All right, but eventually, yeah, we get a pullback, but we find this footing and then we take off. So that's something to pay attention to as well too. So it's like sometimes you don't want to be too in a hurry. Now, the first one I showed you, I got in the trade early, but what was the reason why? Because it was sitting in the demand zone. So if it's sitting in the demand zone, it gave me an easier reasoning for just getting in. So anytime earnings happen, guys, how about just take a couple days to just observe price action so you can see things clearly. You're like, okay, now I see exactly what's shaping up and what's happening. All right. And then, like I said, this trade over here could turn out to be great because you're giving yourself a lot of time to just to see things for what they really are. Now this looks much more clear because it could anybody could have got trapped right here. You're thinking like, oh yeah, this is a no brainer. I'm gonna go short. So close this gap. You get here to the edge, and then it just pull back and rips and just destroys all these traders. The name of the game when you're in this trading is not to always try to seek perfection. You're gonna have losses. You're gonna have things that play out. Just because I show you some earning strategy doesn't mean that automatically that all of this is just gonna happen 100% of the time. You're gonna have times where everything was, green and actually takes off. Doesn't do the opposite. That can happen. So like right here, everything is red. We get a little push up, but we start trending down. We sideways and we move lower. All right. Same thing. Earnings still. So we're not really doing too much of the opposite. All right. So what this was Google. Oh, and then you will notice too that some assets they move differently. All right, so you got to be able to study that. So right here we got what they got earnings and revenue, but we get a drop, push back up, we go lower. So you got to think like, man, why my asset is doing well? Why is it dropping in price? What is happening? So it's not about the asset; it's about the liquidity, and the market wants to find liquidity as much as possible and often as possible. So it's almost like someone is always trying to trick you. So you got to be able to approach this market a lot differently, right? All right. So look, this it. Hit like button, subscribe. It's your boy E. White. I'm out.